Welcome back. Stocks are higher right now. Futures indicating a triple-digit gain at the start of trading this morning for the Dow Industrials and the NASDAQ. Take a look. The NASDAQ up 260, the Dow up 324. Interest rates this morning on the move as well. The Federal Reserve, of course, cutting rates yesterday. And now the 10-year is down 2.5 basis points, sitting at a level of 4.056%. The Fed cut rates by 1/4 point yesterday, as we expected. It was the first cut in 9 months and, of course, the first cut of President Trump's second term. A narrow majority of the Fed board projecting at least 2 more cuts this year. Here's Fed Chair Jay Powell yesterday.
Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. Our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance.
President Trump's recent appointee, Stephen Moran, the only dissenter. He wanted a 50 basis point cut instead of 25 basis. 2 more policy meetings left in the year. The next one takes place October 28th and 29th. Bank stocks this morning look like this after a financial surge yesterday. The rally continues this morning over, of course, the Fed, as well as we're looking at Wall Street's fear index falling nearly 4%. J.P. Morgan Chase CEO Jamie Dimon meeting with Senate Republicans yesterday in a closed-door lunch on Capitol Hill. Florida Senator Rick Scott inviting him to brief them on the economy. Joining me now is former Federal Reserve Board nominee and Independent Institute Senior Fellow Judy Shelton. Judy, good to see you. Thank you so much for being here. What did you take away from Jay Powell's commentary after the cut?
Well, I'm happy to see that the Fed is finally resigned to moving away from restrictive interest rates and by providing more access to capital for small and medium-sized businesses. They've been the ones squeezed out by the high cost of borrowing. We finally have in place this aspect of the Trump economic growth agenda, which is that access to capital to fuel the entrepreneurial energy so we can carry out this transformation that focuses more on Main Street than Wall Street, and that provides more opportunity to be involved in achieving prosperity for Americans across the spectrum. So it's about time. I think they should have gone 50, but they finally have Steve Myron, so they get a supply side perspective, which they need, because the Fed is dominated by that Keynesian thinking that thinks government knows best.
Yeah, and rather than looking at the expected growth and what could come, what is the timeline, in your view, Judy, in terms of when the cut starts to really impact people? And do you expect this to be the cut, the first of 2 or 3?
I would think 3 total, including yesterday's, through the end of the year. That would be minimal, but I think the effect is almost immediate. We certainly see that financial markets like it because it is pro-growth. It's the missing element. And so finally, we can proceed on what I think is a very optimistic path of high growth. I expect better than 3% growth going through the end of the year. And what we want to do is increase the supply of goods and services. And when you have fiscal policy that is stimulative, and the Fed tries to restrain that through restrictive interest rates, all you're doing is empowering government at the expense of the private sector. And the supply side program of lower taxes, less regulation, better energy and trade policies is precisely the way you reverse that. But you absolutely have to empower entrepreneurs by letting them borrow at reasonable cost so that they can expand plant and equipment, so they can hire more workers. That's where you get the real growth.
Absolutely, because you're talking about long-term plans for spending and capital plans. So let me get your take on that too, Mark. I mean, yesterday we were talking about the possibility of a cut in capital gains tax in a reconciliation package, part 2. Yeah. If we get more cuts from the Fed and we get a reconciliation package that includes a cut in capital gains tax, wow.
Well, and that's what President Trump's been talking talking about, how we were a very sick country a year ago, and now all of a sudden we are incredibly strong. We are setting the stage to become even stronger, obviously. As the cost of capital goes down, businesses will be using that to invest, to hire more people, which should help the labor landscape. We just saw, according to Bankrate, the 30-year mortgage is now down around 6.4%,
wow,
which is down from like over 8% maybe a year and a half ago.
That's big.
And mortgage refi applications were up over 50% now compared with last week, which is phenomenal. So we're already starting to see consumers and businesses take advantage of these lower rates.
I love it. I think you got to buy stocks if we're seeing all this play out in the fourth quarter. Am I right?
And probably consumer discretionary, right?
And meanwhile, Judy, many economists are putting focus on the Fed independence, as fired Fed Governor Lisa Cook was at the meeting. She remained. She was a voter. A court, of course, blocking President Trump's efforts to remove her from that position. I spoke with White House Senior Counsel for Trade and Manufacturing, Peter Navarro, yesterday on this. Watch this.
It hurts our trade balance. It hurts everybody who's trying to get a mortgage. It's frozen up the housing market. It should be 50 today, and it should be another 50 at the next meeting. Powell has been a disaster. People talk about an attack on Powell as an attack on Fed independence. It's not. It's Fed incompetence. And Lisa Cook is part of that. Maria, you know that I was sent to prison for defending the Constitution. I was in prison with people who did what Lisa Cook was alleged to have done. And they were there for many years, and they had their houses seized and their businesses seized, and they're paying restitution. This is not a slap on the wrist what this woman did, and she shouldn't be on the Fed right now.
Judy, your reaction?
Well, as President Trump has said, the independence of the Fed is important, but he said they should listen to smart people. And he counted himself, and I would too. I recently met with some big names in the construction industry for residential and commercial real estate, big developers. They were not interested in this soap opera about Fed independence. They were interested in the mortgage rate. So I'm very happy that Treasury Secretary Scott Bessent is calling for foundational reform, not just the tenets of monetary policy itself, and whether stimulative or restrictive rates deliver a better economic performance than harnessing free market forces. Yeah. I would say no.
By the way, all this conversation about Fed independence, I would argue that Jay Powell broke Fed independence a long time ago when he actually got political, coming into the job, immediately coming up with DEI rules and climate change rules, and then cutting rates right before a presidential election. That just doesn't come up when we talk about this issue, but, you know, it should. Judy, it's great to see you. Thank you so much for your work, Judy Shelton, and we'll be right back. Stay with us.